Which stock is the better buy? The Walt Disney Company or Airbnb? I'm going to answer that question in this video, comparing the two across four separate metrics, starting with revenue growth. So let's get right into it. And looking at revenue growth over the last couple of years, you see Airbnb with a considerable advantage over Disney, and in the most recent quarter, Airbnb grew at 24.09% compared to 7.76% for Disney. Each of these companies is benefiting from the pent-up demand for consumer travel. Airbnb more so than Disney. Disney gets about half of its revenue from its theme park, half of its revenue and profits from its theme park segment, although that's been a bit disrupted since the pandemic, you could say, because the revenues and profits crashed in that segment, and then it was switching over to streaming. So the business is a bit disrupted right now. So you can't really compare like for like how it was before the outbreak and how it's doing now. But what I can say is, from my research, Disney's theme park segment is already more profitable than it was in 2019, both in terms of overall profit and profit margin. And that's a result of several reasons. Number one, it's been increasing prices across the board on its theme parks, on parking, on food, on its hotels, on its cruise ships, across the board price increases. And they found a way to better capture what each consumer is willing to pay. What do I mean by that? So now I'm going to try not to do this in my professor way, right? I teach economics at a university and we talk about this concept in class, but I'm going to try and do it in more basic terms, not academic terms, okay? So you imagine one family may be willing to pay $2,000 for a trip to Disneyland, and another family may be willing to pay $1,000 for a trip to Disneyland. So you got this demand spectrum where this family is willing to pay 2,000 and this family is willing to pay 1,000. So as Disney, how do you get this family to pay 2,000 and this family to pay 1,000 and get both of them to come to your theme park without, because if you just publicly put your price at 1,500, then everybody has to pay 1,500, right? So Disney has found a way to capture the family that wants to pay 2,000 for them to spend 2,000, and for the family that only wants to spend 1,000 to get them to visit the theme park as well. So they've done this through various methods. One being its dynamic pricing, helped by its digital reservation system. So Disney can tell how reservations for a certain weekend are going, and if they've got enough people willing to pay full maximum price, then they don't need to make very many adjustments, right? So they can get everyone to pay the full maximum price. But if they start to see this weekend is approaching and demand is less than usual because families are not willing to pay these premium full prices, they can start to add promotions and lower prices to get the folks that are willing to pay a lower price to come and attend the theme park. Okay, that's one way they've been doing it. Another thing they've been doing is adding this system inside their theme parks where people can spend more money to skip lines, right? And people can spend almost and above the price of a theme park ticket uh, on these privileges to skip lines, right? You can buy these passes for several different attractions at the theme park, and you can spend more than a theme park, more than a admission ticket on these privileges. So in that way, Disney is capturing people that want to spend more and people that want to spend less, and getting the best of both worlds, getting everybody to come to the theme park. And in that way, it's increased the revenue, increased the profit margins. Airbnb, meanwhile, is benefiting from this pent-up demand for consumer travel. And the good thing about Airbnb is that it runs that asset-light business model where it doesn't own any of the listings on its platform. It just brings together people that want to travel with people that have places to stay, and it takes a fee from bringing these two together. So naturally, when the consumer demand for travel rises and prices increase, then people start to notice, like, oh man, you can get $150 a night for renting out your spare bedroom in your apartment for a couple of weekends a month, and you might be able to make up your entire rent just by renting out your spare bedroom in the apartment a couple of times a month. And so as more and more folks are seeing that, the listings are increasing on the platform, which then attracts more guests because there's more inventory, there's more supply of places to stay, and if there's more places to stay, the chances of a traveler finding something that they like increases. And so in that way, it's just continuing to grow and generating revenue growth and profit growth long term. So they're both finding ways to benefit from this pent up demand for travel, and like I mentioned, Airbnb more so than Disney. You look at the operating profit margin for the trailing 12 months, you notice that Disney's has been falling from a peak of 24% before the outbreak. That crashed all the way down to a couple of percent, and that's been rebounding, but it's still way below pre-pandemic levels. And I mentioned that it's yet to completely recover from the pandemic. Airbnb, meanwhile, has exceeded its pre-pandemic operating profit margin. In fact, it used to be negative even before the outbreak, and now it's at a very healthy 22.5% as its business has expanded, as it instituted some cost disciplines during the earlier stages, and it can continue to benefit from this without necessarily needing to make any structural changes that is going to decrease its profitability. Next, I wanted to look at cash flow from operations. And again, Disney's has been suffering from the peak of 24% before the outbreak down to 6.2% in its trailing 12 months. Now, I suspect it will recover to this level in a couple of years, although I don't think this is going to happen in 2023, maybe not even in 2024. This may happen in 2025 because at the same time it's recovering from the devastations of the pandemic. It's also making a significant shift from its legacy cable networks to launching its streaming network, which is eating into profitability as well. Airbnb doesn't have those offsetting headwinds to compensate to offset its robust growth from travel demand, and its cash flow to sales is a robust 40.84% and has risen significantly. Finally, I wanted to look at the valuation, compare these two stocks in terms of their prices. Disney is trading at a forward price to earnings ratio of 24, while Airbnb is trading at a price to earnings ratio forward of 35.64. Now, while both of these stocks I recommend as excellent stocks to buy, in fact, both of these stocks are on my list of top 20 stocks to buy for 2023. I just updated that list, and I'll link to that video at the end of this one. But if I had to choose just one of these two stocks to buy, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I think that Airbnb has earned the premium valuation. I will pay the higher price for Airbnb stock compared to Disney stock right now. So if I had to pick just one, Airbnb is the best stock to buy right now. But if you want to check out my bigger list of the top 20 stocks to buy for 2023, I'll link to that video, I think, over here. And so click on that and I'll see you over there. Thank you for watching.